publicly how a company treats its employees matter. The SEC can require companies to disclose that information, but instead of crafting a rule that would provide information and data that could give real insight, the last SEC chair wrote a vague rule that companies can interpret to require as much or more often as little information as they like. That lets companies say they pay their workers a living wage with ample paid leave and retirement contributions while subtracting out half their workforce to while subcontracting out half their workforce to companies that pay lower wages with stingy benefits. We know that's a business model for many companies. Now, why is it important to have disclosure standards that are consistent and comparable across companies?
I think that investing in a company, the human capital, the workforce, is a key asset. I remember when I started on Wall Street at Goldman Sachs, and we used to sell companies. And when we sold companies, we'd always have a section in that private offering memo about the employees, what they're paid, how many are part-time, how many are full-time, where they're located, retention, and the like. It's even more important in the 2020s than I was young on Wall Street because it is so critical to the valuations of the company. Now, again, we'll put this out to, if my fellow commissioners concur, we'll put it out to public comment and see what investors have to say. And then their feedback is going to guide us on any final rulemaking.
I think it's pretty clear investors are going to want more information like you suggest in your Goldman days. We've talked before about how Wall Street has treated the markets as a game for decades, a game they always seem to win at the expense of pretty much everyone else, including communities in Wyoming and Louisiana and Rhode Island and Ohio and Pennsylvania. SPACs, for instance, draw in companies that want to please Wall Street, sometimes make promises that they can't deliver on. Look at Youngstown, Ohio. There's a lot to unpack with what's happening at Lordstown Motors, whether or not the company's ultimately able to succeed, and I hope it does. It seems clear there were outside investors looking at this not as a long-term investment in a community with a proud manufacturing heritage and a talented workforce, but as a way to make a quick buck with no follow-through. There will always be people, of course, like that, but that doesn't mean we need to encourage risky financial mechanisms to encourage speculation over long-term investment. In a situation like that, when those investors make their money and pull out, companies break promises and workers and community pay the price. What are the risks, Chair Gensler, what are the risks that the SPAC market has highlighted over the last year, and what can we do about it?
I think the special purpose acquisition companies, these blank check companies, the risk are to investors and the disclosure to the investors. I've asked staff to serve up recommendations that we could consider as a commission. But in essence, there's a lot of costs in these. And secondly, they usually have a 2-year fuse. And in that 2-year fuse, they try to go out and buy something. And a lot of the institutional investors, when that happens, sell. It's called a redemption right, and retail investors are often left holding the dilution or the significant cost of the bankers and the promoters. So we're looking at greater disclosures and also looking at if there's inherent conflicts along the way, and then again try to put this out to notice and comment and rulemaking.
Thank you. My last question. It's been 11 years since we passed Dodd-Frank. The rules on executive compensation, as you know, remain unfinished. We've seen executive compensation soar. We've watched executives leave with huge bonuses after presiding over fraud and scamming customers. The phrase golden parachute has become a cliche. It's that commonplace. Why is it important to have strong rules to claw back incentive-based compensation when executives got that compensation by breaking the rules, and why should disclose the relationship, how important it is to disclose the relationship between executive pay and financial performance?
Let me break it in two things. For the SEC, it's important to move forward because this committee and then the whole Congress with the president put it in law, and it's a mandate that we shall follow. I remember being a staffer sitting on the other side for Senator Sarbanes. I know that that's how he felt. But two, in terms of the substance, I think why Congress addressed this and put it into law is that if there's a material misstatement or omission in the financials and those financials need to be restated, then the executives shouldn't benefit. And there was a certain number of years, a look-back period, a clawback period that Congress said, well, then you should give up the performance-based compensation if it was based upon faulty numbers.
Thank you, Senator Toomey.
Thanks, Mr. Chairman. Chairman Gensler, one area that appears to have nearly universal agreement is the benefit of a faster settlement cycle for equity securities. As you know, market participants seem to be confident in a T+1. My understanding is that you support these efforts. I appreciate that. I would just encourage the SEC to move ahead as quickly as reasonably possible so that that can proceed. I also think there's widespread support for fixing the money market fund rule by removing the link between the 30% weekly average liquidity and the possibility of imposing fees and gates. You and I have discussed this. I don't think there's a need for regulatory reforms that would eliminate or reduce the viability of money market funds as an investment, but improving this regulation would reduce the risk that I think the regulatory regime imposes now. I am concerned about the SEC not adequately fulfilling its capital formation mission. Last year's appropriation law instructed the SEC to deliver 2 reports to Congress by the end of June, which would help benefit small public companies. These reports are now past due. I certainly hope the SEC will submit those reports promptly. And you testified to the House that the SEC would have a report on GameStop and Robinhood by this summer. That report has not been produced yet. We got a week left in the summer. I do certainly hope that we will see it soon. Now let me turn to cryptocurrencies. And my time is limited, so I'm going to try to do this as efficiently as I can, Mr. Chairman. But I think I know your position, among other things, is that not all cryptocurrencies are inherently securities, right? That's true.
There are a small number that aren't, but I think that, as Chair Clayton said when he was in front of Congress, I think very many of these facts and circumstances are investment contracts.
So here's my concern. So some are and some aren't is basically what you're saying. And I'm concerned that the SEC has not provided sufficient definition and explained how it would apply the Howey test, which I think is the court standard for determining when something is an investment contract. So, for instance, stablecoins do not have an inherent expectation of profit. They're just linked to the dollar. Now, you might use them in an attempt to make a profit, but that's a second-order activity. Is it your view that stablecoins themselves can be securities?
I think that, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush, and it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stablecoin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security. Now, maybe you've got a good argument for why some are and some aren't. My whole point is, I think we need to have clarity on this. I think you should publicly disclose this. Apparently, there are private conversations where you work with people who are proposing particular structures and you give them advice, or your staff gives them advice. I just think we ought to have that publicly, and we certainly shouldn't be taking enforcement action against somebody without having first provided that clarity.
Well, Senator, this Congress could change the laws, but the laws that we have right now have a very broad definition of security, including a note, including an investment contract and the like. And my predecessor, Chair Clayton, and others actually put out a lot of guidance with regard to the Howey.
I just got to push back a little bit on that. It is broad, but it's well defined. There is a very specific litany of the instruments that constitute securities. As you know this better than I do. Investment contract is one of them. And there is a court decision that lays out the prongs for what constitutes an investment contract. I'm just saying, as a layman who can read English, when I read those tests, stablecoins don't seem to meet that test to me. Maybe I'm wrong, but if I can interpret this. I think others could too, and some clarity, public clarity, I think would be helpful.
I see the red light, but I agree with you that some of these tokens have been deemed to be commodities. Many of them are securities, and the Supreme Court has weighed in a number of times. You noted the Howey test. We've talked about the Reeves test was in the 1990s as well, has weighed in, and I think that there's a fair amount of clarity. Over the years, the SEC has even found, believe it or not, whiskey caskets, and the courts agreed in the 1960s were investments. And I think that at the heart of our securities laws was protecting investors against fraud. They get to decide. They get to take the risk. You'll find I'm not negative or a minimalist about crypto. I just think it would be best if it's inside the investor protection regime that Congress laid out.
I see my time has expired, Mr. Chairman.
Thank you, Senator Toomey. Senator Reed from Rhode Island is recognized.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. Cybersecurity is one of the greatest threats that we face, both as a national security threat and also as an economic threat. And in 2018, the SEC issued guidance with respect to public companies. I've been trying over the last several years to enact legislation, Senate 808, the Cybersecurity Disclosure Act, which is very simple. It would require a public company to disclose whether they have a cyber expert on their boards, and if not, why not? I.e., they have other means to compensate. In fact, we did precisely that when it came to financial experts. We do require a financial expert on the audit committee or an explanation why they do not have one. Do you believe that the framework in S808 would be appropriate for dealing with cyber?
Senator, I thank you for highlighting that in our conversations over the last couple of months. I've asked staff to take up two initiatives on cyber, one company disclosure and one with regard to funds, the investment funds. And on the company disclosure side, I've asked them to look very closely at your bill and see whether we would not only potentially include that as a recommendation, but also some other issues around, I'll call it cyber hygiene, and then secondly, incident reporting. When you do have an event or pay ransomware, for instance, when do one report? And that's in the 6,000 or 7,000 public companies. And then separately, we're looking at something around funds, the cybersecurity of the investment management field.
Well, thank you, Mr. Chairman, and I would encourage you to continue to pursue this, and would very much like to see my legislation become law and your regulations become adopted. So thank you. Another issue that's come up, and we're all very happy about the increased retail participation in the stock market. There is a lot of people who never owned stocks before that are buying stocks. And some of it is the result of discount brokers offering zero commissions, aggressively marketing, et cetera. But there's another aspect of this, and that is the payment for order flow issue, where a lot of these brokers have essentially deals with high-frequency trading firms. In exchange for rebates, they will send their orders to these firms. And the question is the owner of the security getting the best deal, or is the intermediary getting a lot of money? And it looks like there is a disconnect, their inherent conflict of interest. I think you described it recently. So are you trying to move forward with efforts to evaluate this practice of payment and see if it is fair to the consumer?
We are. I've asked staff to take a look at this. It's been about 16 years since we did major rewrite of the national market structure. And I think the inherent conflicts of payment for order flow and rebates on the stock exchanges, both, may make our markets less efficient. And this is important for capital formation, and it's important for the retail investors that all three senators have already raised, is that retail investors may not be getting best execution, even if they get a price improvement, but there is price improvement versus a sort of out-of-date measuring rod. And if you measure against the wrong measurement stick, it doesn't mean you're getting best execution. So we're looking out for retail investors. If anybody on this committee or staff legally traded in the retail markets, there's like a 97% chance that it does not go to a transparent exchange. It goes to the dark markets or the wholesalers. And so it's harder to get best execution when you're not competing order to order. So I'm like deeply a markets person and believe in the competition of markets to bring those orders in competition.
Well, thank you, Mr. Chairman. Just you mentioned in your opening remarks that one area you're looking at is the Treasury market, and I think that's critical. As you know, in March 2020, there was a free seizure of the market, not by opponents, but the whole market sort of seized up for a moment. And the volatility in the Treasury market is very much a danger to the entire economy. And so I would ask that you continue to look very closely at the Treasury markets. I know we've tried to learn lessons from March 2020, but I don't think we've fully learned all the lessons and incorporated them in action.
I agree with you, and it's one place I hope that there's maybe even more bipartisanship. I'm working closely with Chair Powell at the Federal Reserve, closely with Secretary Yellen and her team to try to bring more resiliency, safer Treasury market, but also more competitive, that we might lower the cost to all of us, the taxpayers, because we are the issuer in that sense.
Thank you, Mr. Chairman. Thank you, Mr. Chairman.
Senator Kennedy is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I read your editorial in the Wall Street Journal today about the Holding Foreign Companies Accountable Act. For what it's worth, I agree with most of it. It's a damn good bill, by the way, if I may say so.
I want to thank you for it. I think it helps us do our job both at the SEC and at the Public Company Accounting Oversight Board.
I appreciate that. I agree with you, obviously. There's a 3-year implementation period, as you know. Foreign companies, including our friends in China, have 3 years to comply. The Senate's passed a bill reducing that to 2 years. We're having a little trouble getting the House to take it up. Would you be willing to contribute your considerable efforts to encouraging the House to take it up?
Senator, I've already had some discussions and expressed to some of the leadership over there that I support that.
Okay. Who pays corporate income taxes?
Senator, it's the corporation that pays the taxes, of course, then ultimately the owners of those corporations are the shareholders.
Corporations just is not a payor. It's a tax collector, isn't it?
Well, I'm not here as an expert on the tax code. I think the corporation
You're an expert
literally...
on corporations. I think economists are generally in agreement that the corporation is not a payer, it's a tax collector. The owners and the customers and the workers that Chairman Brown spoke so eloquently about actually pay the tax, don't they?
Well, again, I'd never want to mince words, but I think that the corporation, of course, is paying, and then the shareholders have less net income.
Don't the workers pay it too?
I think that it's a cost of the corporation. Like all costs of the corporation, those costs compete with each other. Even the cost of the real estate.
I'm not gonna lie to you guys. They are on his ass. They is on Gary Gensler ass. They ain't playing around Gary Gensler. Gary Gensler need to go ahead and let everything go. He need to let it go. He need to stop playing with him. Stop playing with XRP name. Gary Gensler need to stop playing. They is on his ass.
The workers pay individual income tax, workers pay Social Security tax, and the like.
I just want to be sure I understand your testimony, Mr. Chairman. You're saying that the workers are not impacted at all by the corporate income tax?
Oh, I'm sorry. I thought you were asking a different question. All costs in a company compete with each other, whether it's the real estate costs or any other costs.
Are the workers impacted negatively by corporate income tax? Real simple question.
No, I understand it, but I think it's best as the head of the SEC to leave
You don't wanna
debates about taxes to Congress. I really do think that
I
that's
understand
something.
why you don't want to answer it. I get it. Look, I don't mean any disrespect to you. I followed your career. You've had quite a career in public service. You've made a lot of money on Wall Street. I respect that. I honor that. But as to the people and the companies that you regulate as chairman of the SEC, do you consider yourself to be their daddy?
No.
Then why do you act like it?
I try to take the oath of office seriously that the SEC is set up to promote investor protection and facilitate capital formation and that which is in the middle.
Yeah, but why do you impose your personal preferences about cultural issues and social issues on companies and therefore their customers and their workers? Like climate change and the Second Amendment. I mean, I'm sure you have personal feelings about abortion. Do you have plans to implement or impose those values on companies?
So I want to thank you for the compliment you gave me, and I've followed your career and have the deepest respect for you too, sir. I think that I am not doing that. I think what I've been trying to do is say, if investors want information about climate risk, and it looks like tens of trillions of dollars of assets under management of asking, we at the SEC have a role to put something out to notice and comment, do the economic analysis, and really see what investors are saying. It's really in that narrow set of chalk lines that we're operating.
Thank you, Mr. Chairman.
Thanks, Senator Kennedy. Senator Tester from Montana is recognized.
Thank you, Mr. Chairman. I want to thank Chairman Gensler for being here today. I just got to say one thing really quickly. I've got a farm. My wife and I have a farm. We have a corporation. That corporation pays the taxes. We don't. And we're the only stockholders of that corporation. And that corporation exists over the last 30 years or so, has, quite frankly, helped us financially as we move forward. So just a different perspective. I want to talk about Citizens United decision, which I believe is one of the worst decisions that's ever come down from the Supreme Court. Incredibly detrimental. Has ended up with literally hundreds of millions of dollars, billions of dollars flowing into our political system in an untransparent way. I don't think it helps with our democracy. That being said, the SEC has the power to require companies to disclose corporate political spending. Now, the money that these companies put into campaigns may or may not be determined as being materially important, but nonetheless, it depends on who you're talking about. If somebody throws $1 million at me in a campaign, it's materially important for me in that campaign. It may not be materially important to that corporation. Right now, the current appropriations bill prevents the SEC from doing anything about these contributions. Do you believe shareholders should have access to that material information about how companies who these shareholders own spend their money?
Senator, I thank you, and as you noted, there is the appropriations rider, but putting that to the side,
yep.
As you're asking, similar to the other issues around climate risk and human capital, to the extent that investors want to see that information, and it looks like an increasing number of investors do.
Yep.
I mean, we see that each of the shareholder voting periods, there's been petitions on this to the SEC and so forth. I think the SEC has a role. Similarly, put things out to notice and comment and see what the process brings.
Okay, thank you. Thank you for that answer. I've talked about this in this committee before. I think we really need to take a strong look at extreme weather events. As a farmer this year, for example, this was my wife and my 44th harvest, It was the worst one by far ever due to drought and due to extreme weather conditions. If you take a look at the amount of money that the American taxpayer is putting out for extreme weather events in this country, it is billions and billions and billions of dollars, and it may even be trillions and trillions and trillions of dollars. I think it is irresponsible for us not to look at the impacts that climate has had on our lives and on our economy, because this ain't going away, and it's getting worse. And so, as chairman of the SEC, how do you view your work in considering the impacts of climate change as they pertain to your role as a regulator?
So again, as I've said to other senators, our role is prescribed by Congress about the issuing companies, these 7,000 or so companies, and the investing public, and to bring consistent, comparable disclosure where investors want it. So in climate risk, investors have been asking for it, and hundreds of companies, amongst the 500 largest, I think it's 80+%, disclose something. But we can bring consistency, comparability, and make that decision useful information.
For the investor?
For the investor, and it would be regarding to some of the physical risks that you mentioned, but also the transition risk over time.
Okay. Senator Reid talked to you a little bit about cybersecurity. Could you briefly, in the next minute, talk about the list of cybersecurity requirements that the SEC is looking at implementing?
I think I'm willing to meet with you or your staff to go through.
I should have prefaced this by saying, not unlike climate change, this problem is going to continue to get worse.
I couldn't agree with you more. So there's two lists we're looking at. One is those activities, how are you managing your cyber risk? Because it's a real risk. How are you governing and managing it, and what are your sort of, I'll call, cyber hygiene? Secondly is incident reporting. If you have a breach and you're paying ransomware and the like, what are you saying to the public when this occurs, especially if you have private information? Some companies have tens of millions, sometimes hundreds of millions of the American public's confidential information then taken by the bad actor who has just breached the wall.
So it would be, your work is going to be in the realm of hygiene and reporting the attacks.
That's correct.
And the system they have in place.
Yeah, the system they have and incident reporting, but any advice you have and your staff, we look forward to having good conversations.
We look forward to it. Thank you. Thank you, Mr. Chairman.
Thank you, Senator Tester. Senator Lummis of Wyoming is recognized.
Thank you, Mr. Chairman, and thank you for joining us, Chairman Gensler. It's nice to see you. I have two questions. One is specific and the other very, very general. So I'll start with a specific. In your previous tenure at the Commodity Futures Trading Commission, you were an advocate of providing no action relief to regulated financial entities within your jurisdiction. Now, over the last few years, the SEC has not provided no action relief to innovators, in my opinion, nearly enough. The SEC has also provided 21A investigatory reports on matters of general interest under the Exchange Act. What would you say to innovators who are nervous about approaching the SEC? And how can you improve the use of no action relief and other public statements like 21A reports?
Senator, I thank you for that question, and thank you for our continuing dialogue about innovation. I do think that Congress gave the SEC important authorities, not only to do what you call no action letters, but exemptive authorities and the like. And so I have said, come in, whether it's in the cryptocurrency space or in other innovative spaces, come in, talk to us, and see if our rules for custody, for instance, which I know we've talked about, or transfer agents or something, don't quite fit because they were written in a bricks and mortar time and now we're in a digital time. Let's talk about that. If we need to go to Congress, go to Congress, but maybe we can cobble together something. We did this in money markets in the 1970s. Good people in the state of Pennsylvania, Senator Toomey's state, came into the SEC and sought authorities to do money markets, and that's now a $5 trillion asset class. So I think there's room here to sort things out and try to figure it out, to keep things investor protection focused, but to sort out the new innovations.
And my adjunct question is the general question just about innovation. Do you support responsible innovation?
Oh my gosh, yes. I
And-
mean,
and-
it's brought us these lights in the room. It's brought us this ability to have a hybrid hearing with your fellow members. I mean, innovation is what supports access, economic activity, and gives so much of us better opportunities in life.
So, given that, how do you right-size the protections that are within your ambit to innovation generally?
No, it's an excellent question that I'm sure this committee grapples with decade after decade. I think it's the core public policy framework around ensuring that the public's not defrauded, that somebody's not misleading them and lying to them, to ensure that if you hold somebody's asset, you don't misuse it or abuse it, so to speak, the physical asset. And then on trading platforms, at the heart of our 1934 Act was that competition basically drives to more efficient market, and people don't manipulate that market, don't front run, for instance, in those markets. And I think that these basic tenets of anti-fraud, anti-manipulation, but pro-competition lower the cost of capital for companies raising money and innovators and entrepreneurs, even if they're using, for instance, cryptocurrencies and the like. But I think that inside that policy envelope that we have is a great deal of opportunity. I think it's at the heart of our economic success these last 90 years that we have deeply market-based economy. I said we have the largest capital markets in the world, almost 70% greater than our economic share, 38 points versus 23 points. There's a reason, and I think it helps our economy, but it's also because it's regulated, anti-fraud, anti-manipulation.
So, what gaps do you think exist, and what additional regulatory authority would be useful, both at the CFTC and at the SEC, specifically with regard to digital assets?
I think that we have a great deal of authority. I think there's more clarity than some members on this committee. I mean, I know we're maybe a little bit different on that. But I think that in terms of the gaps, we have a great deal of clarity on, I think, what's a security. But the gaps is the coordination amongst our agencies. So, for instance, the coordination with the banking agencies on stable value coins that Senator Toomey raised earlier. The coordination with my sibling agency that I was honored to chair, the Commodity Futures Trading Commission, on the tokens themselves and the platforms, because to the extent something is a commodity, even the CFTC doesn't have regulatory authority, they have enforcement authority. A wonderful piece that Dawn Stump wrote recently that I thought was worth reading. But working together with the CFTC and how to coordinate. And then there's some in the, I would say, infrastructure side, things around transfer agents, custody and the like, that I think we could work with Congress to help clarify.
Thank you very much.
Thank you, Senator. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. Thank you for your comments about, in your opening comments about my legislation that deals with disclosure around the workforce. I want to come to that topic, but I want to quickly, Chair Gensler, respond to a couple of my colleagues' comments. One, I want to agree with Senator Reid. This payment for order flow, we've been talking about for close to a decade, and we need to sort through it. I think there would be broad bipartisan agreement about that. Let's make sure we make that happen. On incident reporting in terms of cyber, I think the Intelligence Committee probably has as much visibility into that space as anyone anywhere. We have virtually every member of the Intelligence Committee, Democrat and Republican, together on a bipartisan mandatory incident reporting bill for critical infrastructure, for federal contractors. We're trying to work through details. My hope is we can work with you. If you're going to have a mandatory reporting requirement, you've got to have a penalty or it's toothless. but we are trying to work with industry to make that happen because I think, as echoing Senator Tester, it's only going to get worse. And as someone who shares some of your concerns about crypto, I will acknowledge that you have only put one wild in front of West as opposed to two wild West. And as somebody who's worked with Senator Toomey and Senator Loomis, I think and somebody who managed to do pretty well financially because of innovation, I'm all in. But we do need some guidance. We do need some direction. This is I would go to the two wilds in terms of the description of this area. As good as some of the innovation is, Senator Loomis, some of the things I see from the Intel side scare the dickens out of me. So we need to figure out a way to, maybe I ought to join the caucus because we got to find a way to come together on this area of innovation, but also area where I can assure you abuse. I will give industry one credit here. When we were going through this definitional process, I heard from more newspapers, newsletters, entities for a group that says they're not very well organized. I've never seen a group that's got as many publications as the crypto world already has. Let me get to in my last 2.5 minutes, get to the topic I wanted to address, which is human capital investment. I think we've all acknowledged that every CEO says my biggest asset walks out the door each day, human capital. Yet we don't have virtually any reporting. I agree with the chairman. When companies offload their workers as contractors, they're really not putting their money where their mouth is. So I think our Workforce Investment Disclosure Act, which passed the House, I hope will be part of the guidance of what kind of activities you take. We've got to make sure we have ways, because I believe investors want to know employee retention. They want to know what kind of skills and training is taking place. Matter of fact, I hope that you will also go beyond workforce and really look at the whole realm of ESG reporting. Investors want this, yet there are no standards at this point. I'm not saying we need to move to mandatory across the board, but we really need some more look there. And I do want to make sure I get a question in here. And this is, again, a topic you and I have talked about in the past. I've got other legislation that would create the equivalent of an R&D tax credit, which was a radical notion, as you know, in the accounting world back in the 1970s and early 80s, to create an R&D tax credit type equivalent for companies that invest in upskilling, particularly low and moderate paid workers. I think creating an asset class around human capital makes some sense, or at least is worthy of a discussion. And I hope you'll be willing. You can pick any of those items along the way, Chair Gensler, and comment back. But I hope you'll focus on the workforce piece. Thank you,
Senator. I thank you on cyber. I look forward to working further with your staff, and I share your view. In the crypto space, there's an intersection that it's a way to subvert our current anti-money laundering laws and subvert various things that in the Intelligence Committee we're all trying to protect on. I didn't use that term. I want to be respectful. I mean, I just used one wild. I do look forward to getting out to your great state of Wyoming when all these masks go away and everything. But on the workforce, just to say, we have looked closely at your bill and other committee members. It's like ultimately what investors tell us during the notice and comment period too. So when we put something out, hopefully that you'll weigh in. Also, all of the members here will weigh in and say, do investors really want this information? I've always found that if you're going to buy a company, or sell a company when I was doing that at Goldman Sachs, that people really wanted to have a thorough review of that workforce. And it's ups and downs. It's an asset, and it's a critical asset. So I couldn't agree with you more on that, sir.
Thanks, Senator Moore. Senator Tillis of North Carolina is recognized.
Thank you, Mr. Chairman. Chair Gensler, thank you for being here. Are you familiar with Rule 17J1 under the Investment Company Act of 1940, excuse me, and Section 10B of the Securities Exchange Act of 1934?
Yes, generally, sir, yes.
Yeah, just for others' edification, 17J1 under the Investment Company Act of 1940 and Section 10B of the Securities Exchange Act of 1934 are the two provisions used by the SEC combined with judicial precedent to prosecute individuals for the practice of front running. This prohibition on front running includes any efforts to do so, including via information obtained through payment for order flow. So is the practice of front running already illegal?
The practice of front running is against the rules that you said, but also the exchanges. A number of the exchanges, self-regulatory organizations, have that, and it's really to protect the public, that if I put an order in, that I can get that inside the market, and somebody's not going to take that and use it in front of me.
I know that you've been critical of payment for order flow, contending that it presents conflicts, excuse me, of interest for broker-dealers and that retail customers are harmed through inferior execution quality. Do you still stand by that?
I think that we need to take a look at this whole market structure because many orders are not competing with other orders. If you placed an order to an exchange with a broker, if you placed an order, it might be bought by one party and has been publicly disclosed. There's one wholesaler that has 50% of the market share in the retail market. And so it's really about, are the orders competing with other orders? So I'm pro-competition, and I'm not sure that this payment for order flow system really is the best competitive landscape.
Is it accurate to say there's another safeguard designed into the system, this one by retail brokers, to cure potential conflicts of interest for payment for order flow arrangements from all of their execution partners? In other words, this means that the execution partners will pay the same rate and act within the same system, essentially putting all execution partners in competition with one another, excuse me, on execution quality and not payment for order flow.
So I think the challenge is if a party is buying all the order flow or bulk of the order flow, then the order by order competition doesn't exist. So the retail public doesn't benefit from that competition. That, like, when I was growing up, you had competition. It wasn't modern technology, but it was competition on the floor of the New York Stock Exchange, and brokers could scream and yell at each other about what they were going to pay. Now, if one party is buying literally half the retail flow in America, these market orders, that could actually have diminished competition in the marketplace.
Do you think that retail brokers should route the route orders to the market center where they have the highest likelihood of obtaining the most favorable execution for their customers? Why or why not?
I've asked staff to consider the economic analysis and really think about the whole market structure. How can we lower the cost of capital formation and raise the returns for the retail public and the institutional public? And we've not updated in 16 years that national market structure. So I think it's really it's almost like a sweater where everything's knitted together. And I was quoted recently about if something was on the table. I said yes, because I think in this area, kind of it's all on the table to think about the rebates at the exchanges, what's called the tick size, the national best bid, best offer, all with one goal: competition in the marketplace to lower the cost and raise the efficiency. That helps capital formation. It helps investors.
Thank you. I'll probably add a couple of questions for the record to expand on that, but thank you for your answers. I want to talk a little bit in my remaining time about the gamification of retail investing. How would you describe gamification?
It's a term that I must admit I'd only heard in the last year or so, but if I can broaden it out, it's encouraging.
And do you think government should prevent gamification?
I think the role of the SEC is about protecting investors. So I think the question is, are there conflicts that arise by doing behavioral prompts to encourage Senator Lummis to trade and sending Senator Lummis a different prompt than Senator Warner or Warren, and they've sort of differentially marketed to the three.